Hey everybody, welcome to this free edition of our Trader User Group. This is for the upcoming trading week, December 13th, 2024. I'm Preston Brent. Thanks for tuning in. Well, the theme for this week is, will the markets go into hibernation before the end of the year, or will we have a strong flourish till the end? And then what about 2025? Well, we got a lot of things on the table here, so why don't we just jump in here? And before I jump in, actually, the last week in December, I will be taking some time off, so there will be no blog on the 21st through the 29th. So whatever Saturday weekend edition that is, I'll be off enjoying family and friends, as everybody should this time of year. All right, so let's just take a look at what's coming up here in the markets here. Over this past week, you can see a fairly down week, although Nasdaq did finish to clear the 20,000 mark for the first time. Growth stocks this week posted a third consecutive week of outperformance over value. Value's having a hard time again. I'll show you the chart in a minute. And growth stocks did well because we had a strong finish with Tesla. It was up over 12% for the week. Google is up almost 8.5% for the week. In fact, Tuesday and Wednesday were the largest two-day gains in Google since 2015. So a really strong week for Google. You can see the PE ratio starting to get fairly rich right here. The trailing 12-month is 25.75. It's down about 13% on the go-forward basis, but still very, very rich at 22.37. Okay, the Treasury yield moved up this week to almost 4.4%. And the earnings yield's at 4.54. So the earnings yield is just 15 bips over the Treasury. Not a lot, okay? And the current VIX moved up a little over 8% for the week to finish the week at 13.81. I mean, the highlight this week was the Core CPI. Kind of came in with consensus expectations, although just slightly up a notch. We did see the CPI move up 2.7% from 2.6 the prior month. PPI also accelerated to 40 basis points higher from the previous month's 30 basis points. So still far enough away from the Fed's 2% goal. But we did get, out of all of this activity, coming in at expectations in general, the markets are ready to solidify their expectations for the upcoming rate cut this coming Wednesday, next Wednesday, December the 18th. The futures market's putting it at about 97.1% of a Fed rate cut on the 18th, and that was up from about 86% from the prior week. Okay, and like I said, yields were up this week. I'll show you the chart in a minute. But just as a reminder, as we go into the end of this year and Trump administration comes in January, we still have another year of Boom Boom Powell. That'll be his last full year at the helm. His chair expires in May of 2026, and Trump has indicated he's not going to get rid of him through then. So that's a little bit about Boom Boom Powell. He's been in here for two presidential terms. Remember, Trump put him in way back when, and Biden left him in. So if we look at this, and interest rates in 2025 is going to prove very interesting. It's going to be everybody's guessing game as where interest rates will go. But most of the current research that I've seen suggests that the neutral rate in the U.S. markets, which is pretty much where neither a price cut or a rate cut or a rate hike is going to affect the economy. It's right, kind of a neutral rate, I guess, is deemed to be around 3.5%. Okay. So that would suggest 100 basis point cuts between now and the end of next year. I don't think they're going to get there. I think the markets are still relatively hot. And the more they pump this market, the harder it's going to be to tamp that inflation down. So I think December the 18th, next week at the press conference, you'll hear Boom Boom Powell say something to that effect. Okay. You can see the best and worst performance for sectors for weekly and year to date. Discretionary had a good week. The worst materials, and then annually, I mean, communication services knocking it out of the park at 40, a little over 40%. Healthcare bringing up the rear, which shouldn't be a surprise if RFK gets in office in the cabinet under the Trump administration. And then, of course, we move over across the pond and go take a look at Europe. You can see in Europe mostly to the downside, right? The ECB, they lowered their key rate by 25 basis points down to 3%. That's the fourth reduction this year for the ECB. And they also left the door open for more easy monetary policy going forward. All right, they're hurting over there in across Europe. I mean, Germany's having a hard time of it. France, they just got downgraded, I think, by Moody's this weekend from a credit rating perspective. So not having a good time of it. Okay. Meanwhile, in the UK, their economy slowed a lot after a strong start to this year. GDP came in October. It unexpectedly shrank 10 basis points. All right. They were expecting an increase of like 30 basis points, but it shrank. All right. Production is what weakened all across the UK, and the Bank of England. They're expected to hold their rate steady at their upcoming meeting. We did see industrial production fall across UK by 60 basis points in October from the prior month. That's the second monthly decline in a row, right? Manufacturing also contracted there. So like I said, Europe is having a hard time, and it's reflected, as you will be able to see shortly, in the euro. And then, of course, if we look at the Asian markets, you can see the Nikkei, China was down for the week. All of them are up year to date, okay, in the Asian markets. The only one that's down year to date across Europe and the Asian markets is the CAC 40, the French index. They're having a hard time too. But in Japan, investors are now lining up bets whether the Bank of Japan is going to cut their rates this month or in January. I don't think they're going to do either. Remember, we had that debate before, and it took 4 months before the Bank of Japan, I mean, hike rates. It took 4 months before the Bank of Japan actually increased their rates 25 basis points. That was a precursor to the carry trade debacle this past August 5th when the VIX moved up to 65 in an intraday trade. Really crazy day, or 66. So that was kind of what we're seeing, but I don't think they're going to hike it anytime soon. Their final GDP numbers came in, showed the economy grew 30 basis points quarter over quarter. Okay. They were expecting 20 basis points. So they're trying to fight rising inflation when they've been trying to get inflation in that economy for decades. So it'll be real interesting to see how the Bank of Japan plays this out. Meanwhile, in China, they're pledging even more proactive fiscal policy and stimulus to their 2025 budget. So it's going to be interesting to see how that plays itself out. Meanwhile, on the trade front, exports rose a weaker than expected 6.7%, right? The prior month it was 12.7% exports. Remember, a lot of exporters are trying to get in front of the Trump inauguration January 20th by exporting as much as they can because they're fearful he's going to slap a lot of tariffs on them. So they're driving the exports artificially high, shipping them over to Europe, but primarily the U.S. and Mexico. So we'll see how that plays itself out. Okay. What I want to do is shift the screen over. Let's go take a look at the key indexes and some stocks here, or not stocks, but just a couple of key charts, commodities and currencies, and some key asset classes. What you're going to see here first coming up is the E-mini S&P 500 futures. It should be coming on your screen here pretty soon. You can see here this gap up was just a change in volatility futures to the March contract. Remember the DEES S&P mini futures contract's going to expire soon. Same thing with all the other futures contracts. We'll have a quadruple witching or triple witching, however you want to call it, where all the monthlies, quarterlies are going to be expiring this coming week. So anyway, you could see intraday for that, we bounced up, very strong week. I'm expecting, this was my original, I've had several targets here, and you can see how price action bunches around the targets. 50 EMA seems to be holding us up, so that's going to be my support area, this target, which is sitting around, call it 59.66 down to 59.33. I don't think we're going to get down there before the end of the year. I think it's going to kind of run sideways. We have, as I told our members, a little bit of a dip, kind of which is what we've had over the past 5 days. Just minor excursion because there's so much money chasing the markets right now through year end. I think it's going to be choppy to slightly higher unless we get a surprise with Boom Boom Powell next Wednesday. Just as a quick update, Friday we get the personal consumption expenditures, which is the Fed's preferred inflation gauge. They're not going to have those numbers in their meeting on the 18th, but I pretty well bet if I had to lay probability and odds, I think Boom Boom Powell is going to indicate that they're going to be very careful in continued interest rate cuts in this economy. They're committed to December, like I said, it's like a 97, 98% chance of a rate cut, 25 bips, but I don't think they're going to cut them in January. Okay. So that's the E-minis. Now, if we look at Bitcoin, you can see Bitcoin, you know, intraday hit 103,225. That was on the 12th, but it's just hovering right up here now. I do think as we get in through the inauguration, I think there's going to be a little bit of profit taking and then a settling in and then probably a move higher. Okay. And of course, if we look at Nasdaq 100 futures, you can see here just a strong move. That gap up again, a future shift and a change. We did get Palantir and Axiom added to the Nasdaq 100 futures. You know, they were added in the reconstitution. I think there was another stock that was added in as well. But these are going to force a lot of other mutual funds and others to start buying into those stocks. And Palantir and Axiom are two stocks that I've encouraged our members to either purchase or play in the option world. Good trades. And then, of course, if we come down here and look at the Dow, we'll look at the Dow futures. You can see here the Dow futures not doing as well. It tends to follow more the value stocks. You can see where the 50 EMA kind of provided support for it. So that tells me we're probably going to come back down here. There is no divergence in the MACD because there's just so much liquidity and volume and people just trying to just push the markets higher through year end. And, you know, December also is one of the strongest months of the year anyway. So you got a lot of statistics that would back a move higher, at least sideways. But I think the markets left to its own devices just want to move higher. All right, as we go through the end of the year. Here's a Mag 7 ETF. You could see here it's also bouncing off highs here. It made highs on the 12th of December. So it's just been on a rocket ship. Okay, look at the equal weight versus the SPX. This thing fell off the table. When this chart shows the market price action going down, that means value is losing out to growth. Primarily the Mag 7, right? And it's just ugly, ugly, ugly. We've been going down in this pattern really since September. Almost through the fourth quarter, almost always through the entire fourth quarter, value's been giving it up to the high tech and to the Mag 7, okay, and AI. And this is just it's a pattern here that I think is stretching the markets, and that just shows lack of breadth in the markets. And if we look at just the equal weight, just the SPX equal weight, you can see here where we've just been steadily going down. There's only one green candle on the screen, you know, going all the way back to December the 2nd, right? So what it does here around the 50 EMA is going to be critical. You could see here it just poked its head below, but it quickly got back up above again. There is no divergence in the MACD. That does suggest any dip should be bought, all right? So we're going to take a very close look at this and see how this thing plays itself out. Meanwhile, the Russell, that was the only one down this week, a good 2.68% for the week. Just like value, the Russell seems to go with value. Russell is mostly small cap, okay? Small cap, and they're hurting. But, you know, we're going to see it not hurting, but you could see the last all-time high in the small cap was on the 25th. It was up 21.14%. And it's just giving some of it up here. Okay. If we come down here and we look at volatility, let's just put that on here real quick here so you guys can see. It was up a little bit for the week, right? Just barely. but we're still in the green, but just kind of barely in the green right here. The 50 EMA crossed below the 200. So vol is clearly down, since the summer months. And I think it's going to stay down, and any move higher, it's not going to get much more than 17 or 18. There's going to be a lot of pressure to push volatility back down again. Okay. And then, of course, if we come down here and look at treasuries, look at the 10-year rate. That drives the mortgage market. It's going up, right? And if you look at this, my target for the 10-year was up here early next year around 4.7, right? Now, if Boom Boom Powell comes out and hints that he's not going to cut the rates as fast as the markets want him to, that's going to drive these prices even higher, right? And hence, it's going to drive the dollar higher because the dollar tends to go with interest rates. If you look at the dollar, it's been moving up also. And my target for the dollar is 108.81 on the dollar index. So that's going to suggest the euro is going to go lower, right? Now, if we look at the euro on the compared to, and remember I said the Europe's hurting right now. Industrial production, France and Germany hurting. France just got downgraded. My target for the euro coming into early next year is down around 102, 103 to the dollar. We're sitting right at my support point right here, but I've plotted another one here because this Elliott wave got shifted out in time here to late November, which would suggest the Elliott wave 5 is going to get shifted out from here out into here into Q1 down around 102, 103 to the dollar, right? And then, of course, we look at my favorite, the yen. You can see in the yen, I think this is going to go lower. You can see here my target for the yen now has moved even lower. If we get down to this area down here, I'm going to be a happy camper because I'm going to go long again. If you guys remember, and I was even telling you guys in the blog, pick up long yen right over here, and then we had a great run up here. Okay, now it's pretty much giving it all back up, and it's going to make another run again, but just not right now. So I'm waiting and hoping it goes lower so we get a better price and play that baby to the upside. Okay. If we come down here and we look at gold, I think gold is going to go down lower in Q1 of next year. It's barely hanging on to the 50 EMA. And I think gold is going to come down here around the 2,500 area. All right, that's what I'm looking at. And then, of course, if we look at silver, it gave up the 50 EMA and is actually below it, right? Right in this area here. I think silver is going to come down into the high 20s, or around 29, 28. Right? And then at that point, it's going to be scratching the 200 EMA, and then I'll be interested in looking at a long. Right here, it's kind of it's a low probability bet that you're not going to get it right. It's not set up right now as far as going either directionally long or short, right? Depending on your time frame. But if you're looking at less than 90 days to 4 months, I think silver and gold are going to go a little bit lower. If we look at oil, it's hanging in at this low price down here. Look at these little humps. It's up and down, up and down, up and down. My target for oil going into next year, into the first quarter of next year, is in the high 50s. It's sitting at 71 right now. We're in the red for the year, but just barely. We actually recaptured the 50 EMA. Okay. Until we can break these lows here, then I'm going to stay out of it. If it goes up, I do not see oil coming up and breaking the 200 EMA, but if it does, it could be like this here. I want to see follow through. If that's the case, then the dynamic regime in the oil sector has changed, or in the energy sector. So I'm gonna watch that really close and see where it goes. Okay. Then of course, if we come down here and look at nat gas, I want nat gas to go lower, but with Trump coming in and what he's talking about opening more LNG, shipping more over to Europe, that tends to be more bullish than bearish. And my target for nat gas has now been more upside target than downside. Friday was a down day, obviously, but I think nat gas can move a little bit higher before I'm ready to say, okay, now let's play it to the downside. All right, everybody, that's just a quick and dirty on the major markets, some of the commodity sectors, and where we are with other asset classes. Members, I will see you this Sunday evening for our weekly market watch. Otherwise, have a good time watching the Army-Navy game. Take care, everybody. Ciao now.